What up, everybody? It's Andrew from Tap FinTech. Today, we're going to be talking markets. Once again, I am not a financial advisor. This is not financial advice. This is simply me using our tool known as THOR to navigate the markets. Today, we're going to talk about revisiting some of the trades I talked about yesterday. We talked about SOL and Injective. We'll quickly cover those, and then we'll use some of our additional tooling to see if there's other good trades on the table right now. And yeah, let's just dive right in. So, currently, today timestamp, it's Thursday morning, about 12:47 Eastern Standard Time. Bitcoin's at 83.8. Ethereum just fell under 2,000, and Solana is at take profit 2 from the short we called yesterday. Right now at 127. Let's just cover Injective real quick since that's what we talked about on the show yesterday. Injective at 972. So, first things first, there was a little bit of news. I say I don't trade news, but it can definitely have an impact on things short term. Overall, my macro market sentiment is still pretty much where it's been since we started these classes, is that we're at high levels of key levels of support pretty much across the board. There's still a lot of push for Bitcoin to go to 76,000. Equally, we'll look at THOR 2, but there's also a case for Bitcoin to go back to 90,000. So we'll talk a little bit about that. We'll just check the markets, and then I'm going to use THOR Pro to see what trade I'm going to take today. So just going over to Tap. First things first. Solana is primarily what we'll talk about just because that's most of our bags. And then we're going to have a fun little update at the end of this that I probably shouldn't share, but I'm going to do it anyways. If you're listening in live in the Discord, feel free to ask questions in the DGen chat, and then I'll answer those at the end of the class too. And then the update's really for y'all in the community. If you want to follow along, these classes are available live in our Discord. And also the day after we record, we do post them on YouTube and for everybody else on Twitter. So first things first, you know where I start. Solana USD, I'm on the 1 day. There's nothing right here that has any available ups or downs. No longs, no shorts. That's not bad. That's not anything to be worried about. It just doesn't give us like a big North Star in terms of navigating sort of macro movements of the market. We are below where the original level of support was, around 145 to 137. We've fallen below that. We're holding around, that 130, 135. It's acting as resistance right now, but no big deal. Let's see what's up. I've just navigated to the 4-hour on the Solana chart, and there are just signals stacked on top of signals here. That can get really overwhelming for people, and so what I'm going to do is just break it down as best as I see it. I basically see 3 ranges that we're looking at. I'm just going to go ahead, and if you're in the Discord, we're looking at Solana. Everyone has access to Solana, so if you want to follow along, you can. We're on the 4-hour. We've got the $98 to $89 range that I'm just lumping together right here. That's a long, although the invalidation levels do differ a little bit. I say a little bit, pretty decently, 136 and then 152 on the invalidation levels. That 136 is still the same invalidation level that we see on these two signals that are higher. And so that's a really prevalent number to stick in my mind right now, is that 136 is currently operating as resistance on Solana. It's not, we just tested it, it looks like yesterday. And you can see if you're on the chart, we're looking at 136.093, which is pretty dang close to the invalidation level of these longs at 136.72. So we didn't invalidate these signals, but also it had a pretty typical response to that number that we were used to on a 4-hour invalidation level. That's pretty decent resistance. It just resisted. Does my thesis change? Am I currently going to change my trade? Let's just find out. For those of you who don't know, my exit levels personally, again, I'm not financial advising anybody here. My exit levels are at the 148, the 159, and then the 166 level on my Solana long. I'm largely a spot trader, so for me, I'll just be selling some of my assets at those intervals. And if we get a market reaction, I'll recompound back down. 137, pretty much down to 131, it looks like overall. And so today, right now as it stands, nothing has changed for me personally, but I do acknowledge we have now tapped, kissed, flirted with the resistance once, and then we had a small pullback. If you were following along yesterday's show, this also coincides exactly with the 1 hour short that we called at that 136 level. I think that there was a 3.57% take profit one trading delta. So it wasn't the biggest trade, but that is the third profitable trade that we've talked about on these channels in these classes. So I think it's pretty cool to start seeing how it's working. So for me right now, nothing really changes. I still have my spot bags. I'm still prepared to buy the three levels that I see here on the short or on the long side, 117 to 116, 110, and then that 98 to 89 range. Look, this is hard when you get into a position like this as a trader, when it is a 50-50 choice. But unfortunately, like we've said 100 times, Thor is not a crystal ball, but it is giving you the potential, directions and where your entries should be depending on which direction that we move. If you're bearish as, AF right now, you will be looking to get your entries at these lower levels, 117, 110 to 98. Heck yeah, if we get there and you're bearish and you flip to wanting to take a profitable long, there's your entry points. Easy peasy. Now, if we move up and you're bearish again, you also have your short levels right here, just right in front of you. So if you're bearish and you're happy price go down, where your entry zones are, or where you start hedging your asset, or when you're going to start taking your shorts. Each one of these signals, when stacked on top of each other, are 100% valid signals on their own. However, as a trader, I always recommend that you add this into your own personal risk management. You need to be completely aware that this 148 signal isn't the highest signal that we're presenting right now. And so for you to be sort of risk adjusted, you need to be, either a tight stop loss, if that's what your game is, or adding to your short or your hedge at the levels that are higher right now, 149, 166. The last thing that you want to do is take out a mortgage on your house on this 148 short and throw all your eggs into that basket. What happens if it gets to an invalidation level, or if it, has an 8% dip, which is generally speaking how we qualitatively present our signals, is that a virtual stop loss of 8%, if we do not hit that 8% stop loss and we hit at least take profit one, that's a winning signal for us. And so just with that in mind right here, you can see that what we would apply like a virtual stop loss to, an 8% stop loss, just as like an overall general, sort of managed stop loss percentage, you're right here in terms of the profit. You're at a 7.23% profit if you take profit one on this short. For you, if you're a trader, you can do a simple 1-to-1 risk to reward and be within that threshold or your tolerance level for your stop loss. A 1-to-1 at 7.23%, it gives yourself room to breathe. It gives the trade room to breathe. And you should add that on top of, 147 right here, and see if it's going to be in or above or below what this next entry is right here. I'm not a mathematician. I'm looking for my phone, but I'm recording on it. And so you can do the calculations in your head. I'm going to assume, 10% is around $15 on top of this. That puts us at the 165-ish marker, 163. Lo and behold, you now have a signal right above and still within your stop loss tolerances if you wanted to add to your position. If you wanted to add to your short, if you're just doing a straight up perpetual trade, you now can add to your position at 159. And does it adjust your take profits? It sure as shit does. Look at the take profits that you have. Take profit on this signal is 137. It could very well be a clean entry and exit at these entries and first take profit. That's how Thor works a lot of times. But you also know, hey, from a risk adjusted perspective, if we get to these higher entries, it's still within my tolerance for my stop loss. And I could either add to my position or adjust my position if I want to. You don't have to do a 1-to-1 R&R. You could do a 1-to-2 R&R, and you would cut down where your, stop loss tolerance is. Instead of it being 8%, 7.5%, it goes down to like 3.8%. That's what you're saying. Hey, I'm willing to weather and just cut my losses at a 3.8% drawdown. For these big signals, that's really not a ton of room. When you get into the 1 day and 4 hour signal territory, I've said it time and time again that it needs room to breathe. And you may not know what that means. It just needs some space. If there are big trading ranges or trading deltas on these signals and you expect to have like a crazy tight stop loss, you're probably going to get stopped out more often than not. If you give yourself a responsible stop loss for the, profit threshold that you're looking for also, that's when you get into that risk adjusted. Okay, I've calculated my risk. I know what this trade is. I've planned my trade and now I'm going to trade my plan. And so specifically here to Solana, if and when I personally am going to hedge, like I had said yesterday, up to about 15% of my bags at these levels. I'm going to start opening up a small hedge right here at 148 all the way up to the 159 range. And I'm personally going to expect us to have a market reaction around there. But I'm also very well aware that I will add probably another 4 or 5% if we get to the 166 range. Looking at this, if you just say, Andrew, you just sort of, threw money at each of these signals. No, what I did is I basically set out the amount that I'm willing to hedge. Generally speaking, like 10% is pretty average. You can get a little ballsy and go up to 20% if you want. I like to stick around like 15% as my max. So I'll do like 5%, 5%, 5%. And when I'm saying hedge, if you're not familiar, look it up, but I own a bunch of Solana. And I don't want to sell my Solana until my actual spot Solana until we get to that 166 range. It doesn't make sense for me to do it otherwise. But I will take advantage of Thor telling me, hey man, there's some resistance. These are really good shorts. And 2 times out of 3, these are winning trades. So I've just basically laid my plan out. I'm going to open up a hedge starting down here. And you can do however you want or however I want, which would be, probably like 5%, add another 5%, add another 5% at 166. If you're in the Discord and you're not following along, 150 is when I'll open a 5% hedge. 160-ish is when I'm going to open up an additional 5% hedge on my spot holdings. And then at 166, not only am I going to open up an additional 5% hedge on my asset, for the first time, I'm going to actually sell some of my Solana that I bought a lot lower than that. That's my first real take profit on my personal spot long. I'm just playing and hedging the market right now with a relatively small hedge on these shorts. So let's just hypothetically assume we get all the way up to this 166 short. Cool. All right, man, I'm taking profit. My short is in at a loss right now, but overall I'm up because it's not outweighed by my spot holdings. And then we get to where this 166 pretty fat signal right here says, all right, hey, GG, we made it all the way up here. You sold some Solana. You got a small hedge that's underwater. What do you want to do about it? I'm going to sell some of my personal Solana. Boom. Okay, cool. Check that box. And then I'm going to look at this first take profit. And that first take profit is 144 or a 13% drawdown. I clearly didn't math so great. I mathed okay. But again, you don't have to be a mathematician or know anything about charting in order to use Thor, which is the beauty of it. This is just the tool. It does the work for me. I've just learned how to use it with my own personal trading strategy. So anyways, back to it. Let's say we're at 166, and then we're starting to look at take profit 1. Take profit 1 on that short's 144, which is below where we originally entered. So if my plan is to hedge my way into my spot sell, my plan to follow that up will be to hold my short either to where I set my stop loss, which we can talk about after, or, ideally when we hit take profit 1, which will not only put me in profit on the 5% I added at 166, the 5% I added at 160, but it will also get me down to below my entry at 148. That's a really good macro plan. That's a really good understanding of all of the possibilities in an upward market based on what Thor has told you. That's a really good plan. That's the plan I'm going to personally use. What I'll do after that is that the 4-hour signals, as I've said with 1-day signals, they can take a lot of time just to get into the entry point, hit take profits. You have to be patient. You have to be extremely patient when you use 1-day signals, and 4-hour signals, you need to apply that same level of patience. But what I'm going to personally do, I got my bull thesis, right? I'm going to look on the 1 hour. Nope, we don't have any signals. And so I'm zooming in on the market again. And on the 15-minute, which is like very much active day trading, let's see what we got. Okay. I have 2 longs at 127 and 126. Congratulations if you're listening live right now. We are in 2 active 15-minute Solana longs, I believe. Let me just check. This should be updated to active here in a moment. We use the Bybit pricing APIs right now. Sometimes, as you can tell, if you're looking at my screen, I have a 126 up here on Drift. So there's variance across markets, but we use Bybit for our data streams. If you're looking to do price comparison on where the active markets are, for Thor signals, Bybit. So check Bybit. But we're in 2 active longs on the 15 minutes right now. With take profits going from 130 to 132. And then we have a short at 133, which we'll update to invalid here in a second, I assume. I don't want to check my drift because it's private, but I'm going to assume that that's what's going on. Let's just look at CoinMarketCap. All right, so yeah, we're right there. You can see there's a little price difference, but we're right there. We're entering these longs at this time. So does that do anything for us? Let's just assume we had a great conversation. We made a big plan. Let's see if it's still relevant. We got to 126.90, let's just say. And where are we? Let's go back to our 4-hour signals. So 126.90. Does that invalidate our bull thesis? Well, I go to the signal invalidation on our shorts, and the invalid range is 120, 120, 112. Does that invalidate our bull thesis? No, it does not. You can be in an active 15-minute long right now if you want to, and let's just take a stab at what the 15-minute longs look like in terms of returns. Boop. So Solana 15-minute longs cumulative total, let's start there, is 73%. So you have a 3 out of 4 chance right now that those 15-minute signals are going to be profitable ones. In the last 30 days, again, 74.5%, 3 out of 4 chance that those trades are profitable. We are going to, where am I at? Yeah, y'all. All right, here it goes. 127.47. We just went down to that second entry right here. I won't be surprised if maybe even by the end of this recording, we're seeing $130 Solana, which would be take profit level 1 for both of these signals right here. So GG. Now, let's just see. So in terms of my bull thesis for Solana, I know my plan that way. And now let's look at it from the alternate side of things, because that's what you have to do if you're in a 50-50 market. You can't just go into it. And if you do with your own bias without a plan for up or down, that's when you're going to start making mistakes that will wreck your bags. And so, cool. We know what to do if number go up. Sick, right on. I know where I'm trying to sell and I know where I'm hedging. We also have all of these stacked longs that you see on the 4-hour as well. And so the same thing that we just did, let's do on the alternate side, because it's not going to change, it's not going to change that we're trading Solana. It's not going to change what happens in the market. We're just prepared either way. So we have stacked longs, like I said, essentially in 3 different ranges. If you're in Discord, those ranges are 117, 110, and then we have the $98 to $89 sort of, that hurts zone. The invalidation levels are 136.72, 136.72, and then we have a 136 and then a 152. So pretty broadly speaking, until we get over 152, I know that there's a pretty serious drawdown still on the table. I see, if I'm consulting the right-hand side over here, that we do have signals that would invalidate that low. Okay, cool. So the bull thesis invalidates these entries at X price. I've got that now. And same right here, 136, 136, 136. These three long signals are invalidated by the first short on the 4 hour. It can get complicated if you want to let it, but you don't have to. You just have to set your plan now for a downtrend. Situationally, it's going to depend on where you're at with capital, where your exposure's at. Did you buy the effing Pico top and you're in at 260 Solana right now? You know, where you're at will differ from where I'm at and where anybody's at. But I'm going to make some assumptions and I'm going to talk about me personally here once again. I have a lot of my capital deployed. I still have my OF fund, right? And more. I have money set aside if we get down to $95 Solana. Will it hurt to get down there for me? 100%. Like everybody else, I've been trading at higher ranges. And my entries are across the board. My major entry for Solana is $8 though. And so for me, I can still be looking at a comfortable 10x without having to worry so much. For people who got in a little bit later or bought 212, whatever it is, you can see that the situation really dictates your perception of the market. I could still be super bullish, super happy at $90 where other people are in absolute max pain territory. I am saving my money personally to see if we get into that $98 to $89 range. Now, if we get to 120, if we get to 110, am I buying? Yes, I am. I'm going to add probably 2 to 3% at each of these levels. It's not a lot. Why? Because I already have, an amount of Solana that I'm comfortable holding for this cycle and for a long time. I'm not really trying to personally buy a ton more Solana. That could be so different for everybody else. But what I'm looking for personally is, I think, bigger trading ranges on assets that haven't really seen this cycle's light yet. And we can talk about that here at the end, but there are a lot bigger trading deltas on a lot of other assets. And for me personally, I'm putting my capital available for active trading onto those. There are injective signals with the first take profits, like a 60% delta. That's more of a risk adjusted return from my own personal situation. So for me, I'm not really actively trading Solana. I have my F. I think we're trying to get these on YouTube, so I'm not trying to curse anymore. But holy F, this sucks. So much bees, $95 Solana, I will be buying with cash, USDC. Boom, buying. Down here, I'm not really doing anything. 110, I don't care personally. Now, once again, the last signal on that 3 range, I am buying. So, not to be convoluted or anything, but I do want you to see, you could have a totally different takeaway from these signals. You could be sitting here saying, holy crap, dude, I could potentially be buying $110 Solana for a 9% return. Oh, shit, right on. 4 hours. 60%, 2 out of 3 chances per winning. 4 hours we haven't hit any right now in the 30 days. We probably are about to. So that's how I would trade Solana. How you would trade Solana could be totally different. As we're talking right now, we're seeing a market reaction to those 15-minute signals that we just talked about a couple minutes ago. We're at 127.73. Now, not to mislead anybody who's listening live, I don't know even how many we have. Let's see who we got. All right, cool. Hey, thanks. A lot of y'all in here. Really stoked that y'all are in here. So if y'all are in those 15-minute signals right now, let's look at that. You have a 2% trading delta on these first levels. Take profit 1 on both of these signals is 2.75. Unless you're leverage trading, those ranges don't make a ton of sense. If you're leverage trading, you have to operate with the assumption you know what you're doing and you know how to manage your risk really well. For you to be over leveraged on positions like this, just look at the number 127 after everything we just talked about, where 117 is still on the table. That's when you need to say, all right, dude, I can throw a small amount of my available capital into day trading. While really my bread and butter all comes from those macro moves. And again, I'm talking about me personally. I do not stress the 15 minutes. But if I'm sitting here, if I have time, if I can be monitoring the trade, and if I'm not throwing my mortgage at it, hell yeah, right on. Take a 15-minute signal. Apply a reasonable amount of leverage to amplify that 2% trading delta. But be massively aware that if you don't have the inverse of your risk adjusted for stop loss or for your max drawdown or for your, that $100 or whatever, $1,000, wherever you're, at, that doesn't wreck me. And that's when you get into day trading with 15-minute signals, one, more responsibly, and two, more profitably. If you start hitting it with a big ass bag with max leverage and you get wrecked, you get wrecked. It doesn't matter if we have 75% win rate on our trading signals. If you don't adjust your risk on your 1 out of 4 losing trade, you get wrecked. So be willing to walk away. Now, I'm not the best at walking through this, but this is how I'll use the risk management calculator. First things, full transparency, I wouldn't be taking this trade personally. I don't really like leveraging. I'm teaching a class right now. You know what I mean? Like, I can't be watching it adequately for me to comfortably take it with a really over leveraged position. But if I were, you could go in and you can use the risk management calculator by clicking RM. It pulls it up. You can set what take profit level you want. If you know me by now, I am a take profit level 1 maxi. Some master traders know how to scale perfectly in and out to take profit 1, 2, 3 and integrate the additional signals into it. Hey, bro, just make me money on these signals. I'm going to walk away happy. 2%, whatever. But we'll get into injective after this, and then we're really going to talk numbers that I'm happy holding for. But moving on, you set your take profit. You put the amount of money that you're willing to lose in here. I'm going to say $1,000 just for shits and grins. And it will tell you on a 1-to-1 where your buys and sells are. I'm willing to risk $1 to make $1, extra. Your 1 to 1.5, I'm willing to risk $1 to make $1.50. 1 to 1.2 is the same. Obviously, I'm willing to risk $1 to make $2. And then it tells you your buys and it will tell you your sells. It will tell you the amount and it will also give you your virtual stop loss. That's a great tool for you to use if you're day trading. If you're really trying to see if this trade is worth your time, money, or stress, let's get real here. Trading is stressful. If you want to risk it for the biscuit, I'd probably push you on something to not be 2%, but you can use this tool to really find and take out the guess. Obviously, you can tell with a 1-to-1, your stop loss is lower. You don't stand to make as much money, but you can weather more in the market and still get to that potential take profit level. As you move up to a 1-to-2, you can see that you have a more aggressive stop loss here. You're not willing to lose a ton of money in order to make double, but that is in and of itself a risk. Maybe you get stopped out because you were too aggressive with your stop loss. Maybe they stop hunt your ass. Maybe you open up a way too leveraged position and you're on an illiquid ass exchange and then cough, blow fin. And then they fucking straight up stop hunt your ass. That happens. That will happen if you're trading on exchanges that, it happens everywhere. I don't even want to isolate anybody, but people will stop hunt you if you're trading with size for sure. And or the markets just on their own will wreck you if you're being too aggressive. So again, look, 15-minute signals. We just covered 3 out of 4 of them win. Hell yeah, right on. But you have to understand what's on the table in terms of risk before you get there. So, or as you're getting there. So, on that 15-minute signal, GG if you guys are taking it in the Discord. We'll talk about it. We'll keep our eyes on it. I'm probably, if I were going to do something like that, like a 1-to-1, whatever, 2%, trade with size. If you buy $1 million and you get a 2% return on that within an hour, hell yeah, right on. If you're buying with $100 and you get a 2% return in an hour, obviously that's when you're going to want to apply leverage, but I'm going to encourage y'all to do something completely effing different. And let's talk about that. So Solana, I think I really covered well today. Y'all know where I'm at on my hedge, where my first take profit on spot is. And then I'm personally ignoring these largely. I don't have like any perpetual opened up on Solana. I don't have anything other than just my spot holdings at, $8 to $20 Solana. We didn't get lucky. We were just really fucking stubborn, So I ain't selling here. Anyways. All right, cool. So let's move on. Yesterday I used THOR PRO and I put in some criteria that I was looking for a trade. A minimum 10% trading delta. I didn't think I excluded any assets, and I don't know exactly what it was, but we worked through using THOR PRO and it gave us injective, both on buys and sells. The ranges that we were looking for were all over 10%, and a macro, top 100 coin injective right on. I'm into it. Just consulting the data real quick because I use this personally myself. Thor is not a crystal ball, although it has an insane return overall. Look, and here we are, injective. We don't hide anything. Injective has had a lower than our standard performance at 54.9% over the last 30 days. That's still on the right side of probability. Those are still algorithms that people are insanely bullish on. That's still giving you a competitive edge against the market. With proper risk management, you're winning more often than not. But for us, for me, for Hi Andy, not like a perfect trader by any means, I'm going to be really well aware that over the last 30 days that it hasn't been hitting like, Andy's been saying 70% average return. This is the cumulative total talking here. But I now know I've got a 4-hour signal, 0 out of 3, 40% on the 1 hour, and then a 67% on the 15-minute. Okay, cool. That's okay, cool. I'm aware. Let's see if that adjusts my thesis, and let's go from there. Moving on to the cumulative total, we have overall 64%. All right, cool, man. A little bit better. On 15-minute, 1 hour, you're still batting 2 out of 3. On 4 hour, you're right under 60%, which is still great. And then on the 1 day, I think the most impressive time frame for injective for us, obviously, is 80% on the 1 day. That's crazy. So you get into just starting with the data, and you can make your assumptions saying in the past 30 days, I think that, volatility and some, global news and blah, blah, blah has really invalidated a lot of signals, and that they hit their virtual stop loss, and that we're super want you to know that. And zooming out, I would say overall, we're still really great at trading injective. We still have a 64% cumulative hit rate, and I'm very impressed by the 80% hit rate that we have on our 1 day. That's crazy. I'm a boomer trader. I always start by looking at the big macro pullback. And that's great to know that on the most macro signal that we offer, 8 out of 10 times, 4 out of 5 times, you're hitting a home run. Hell yeah. Let's go talk about the home run I started looking at real quick. Like I said, we use THOR PRO. Y'all in the Discord, y'all know everything. Yeah, hell yeah. Frogs fuck. Buy a frog pussy. And, if you're listening to this on a recording, we have a whole trading community with obviously myself as a trading assistant, advisor, whatever. We have a group known as the Degenerate Shitcoin Trader channel that has master level traders in it all day and an active community around it. So if you're looking to learn how to use Thor and you're coming at this from the Cyberfrogs NFT angle, you can come in, join our Discord, and have people essentially be there to help support you learning this on top of these learning resources. And that's our big goal here, is that you don't have to be spoon-fed signals. You don't have to get spoon-fed trades. You don't have to be looking at Twitter. You can just come in and learn how to use a tool like the rest of us have. And more often than not, you can learn how to, make use of the crypto volatility and become a more profitable trader. And that's what our whole goal is. For y'all in the Discord, y'all know that frogs fuck already, that we love y'all. So, all right. Moving on to the trade that we talked about yesterday, and it's injective. Zooming out, as I've always said, this was the signal that I originally found and that I'm personally in spot long right here. When we first got this signal, Injective was 30 something dollars. And you looked at this with a 60% drawdown and you said, yeah, effing right. Okay. Ooh, max pain happened. And we got into a signal that most of us were really well aware of. And having sold $30 Injective myself, was really excited to get this entry again. And I took advantage of it. I bought a fairly decent amount of spot Injective that I'm holding because, one, there's an 80% chance it's going to make money based on the data from the cumulative total of signals that we have. I'm not financial advising anybody here, but that the first take profit is also a 56% trading delta. That's first off cray cray, and all the way up to a 91% trading delta from a mathematically probable profitable trade. With trading deltas that are the ones that people like freak out over. You don't have to go and gamble on meme coins when there is a really high percentage chance that this right here is a very profitable trade looking at you in the face. So that was my big, hell yeah, we're going to take this trade. Now we're below entry again. We're still within the range. We're right below the range. The range is $10.79 to $9.90. We're at $9.80 at the time of this recording. So, oh my gosh, do I freak out? Do I sell? Well, if you're over leveraged, yes, because straight into it, if you're going into this from a risk managed perspective, expecting to make an easy 56%, they are not going to just give that to you. They are not just going to turn around and give you a clean entry, perfect entry. Oh, hey, all you crazy leverage traders that knew that this range was on the table. Yeah, man, your 50X is going to instantly pay off. No, probably not. And that's exactly what happened. We blew right past it. First time. People hit this range. I think, a lot of us in algorithms knew it. I don't think it was crazy for you to say that this was a high level of support. But it fell through. And it went all the way down to $8.20. For a lot of people that were over leveraged, you probably got liquidated. That sucks. If you have that expectation of making 56%, you have to have your threshold for risk basically managed for that return. And you can do that by just doing the risk management calculator. You don't have to overcomplicate it. Look, I'm willing to lose $10,000 on this trade. That's just me. You don't have to be me. I'm not going to go bullshitting people on what's on the table here. You have to be willing to risk money to make money in crypto. You can gamble, you can buy NFTs and have those go to zero. You can, do whatever it is. But for me, I 80% want to win this. And I'm going to go, when I'm having a 56% return, I'm going to go probably on the higher threshold of risk to reward and say that a 1 to 2 risk to reward is what I'd like to do. It gives you the amount of Injective that I need to buy. It tells me what range I need to buy it in. It tells me the amount of Injective to sell, obviously the entire order, and at what price that I need to sell it at. Buy at 9.9. Great. I have that opportunity literally right now. And sell your Injective at 16.87, which I think is the take profit 1. Obviously, it is take profit 1. So for me to make 10 grand, for me to make 20 grand and risk 10 grand to do that, I need to buy 2,871 Injective at $9.90. I could do that right now. For me to make that 2x reward, I need to sell it at 16.87. Now, 1 to 2. A 56% return's great, but to get there, you need to be willing to weather a 28% drawdown. Are you, can you, and will you do that? Because I'll tell you something right fucking now. The minute you put a large amount of money onto a trade and you see it down 28%, your first instinct is going to be to protect the rest of what you have and fucking close that trade, or be anxious or nervous or scared. All of those are valid feelings. I'm not telling you that they aren't, but they have no place when it comes to trading. And if you let those permeate your trading, you're doing yourself a disservice, because these tools and everything that we're talking about here is completely just the furthest thing from emotions that you could be. It's a plan. That's all it is. So what's your plan? I don't give a shit if you're scared. I really don't care. I have to go outside, take walks, take hikes, go build stuff, go do shit all the time because I'm managing my own emotions when it comes to trading. And I'm unwilling to let those dictate choices that I make financially as best as possible. We're all humans, until you can code that out of yourself in an AI version, you're still a human and you still have to be able to manage that. But the biggest thing you have in your corner is making your damn plan right from the get-go. So I said it right out flat. I want 58% return. I'm willing to risk, a 29% drawdown. Oh my God, fucking crazy. And I'm going to set my stop loss at $6.40. Now, now that I'm telling y'all personally, like if I put a good amount of money on something like that, I'm going to be actively monitoring the additional Thor signals that we get much more heavily. I'm not going to go willy-nilly, updating my phone every 5 seconds, because if that's where you're at, you're also doing it wrong. Stress and anxiety permeating your trade. But if I want to have less stress, if I want to weather more drawdown, if I want to take a bigger risk, I can go down to a 1 to 1.5. I set my stop loss lower, $4.68. I still got my buys and sells. Nothing really changes. You don't make as much money. I'm willing to risk $10,000 and I'll make $15,000. That's still cool, man. That's still like a third of some people's yearly salary on one trade. If you can get there, because they're not going to give it to you. So, okay, cool. I now think, all right, maybe a 1 to 1.5 makes more sense. And I'm at like a $4.80 stop loss. Let's just say that. Let's go dig in from there. I've taken this trade. It's a lot of money. I'm down. Cool. I like that we have a short on the opposite side here where we have a short at $12. Is that my first take profit for this signal? No, it's not. Am I going to take it? Am I going to trim some of my position there? You bet your sweet ass I am. Because there's an 80% chance that it's going to work out. First off, does it invalidate this signal? No, absolutely not. All it does is get your first take profit and or like resistance. And what are the take profits? The take profits go back down into the same entry. It's not uncommon for one-day signals or big macro moves to take time. This is the breathing I've talked about. This is all right, dude, so it's not just going to hit $11 and go straight to 17. Nah, dude. We're already telling you there's a $12 signal right here. You should probably trim your position on and then recompound back in. If you trim too early, what's the worst case that happens? Oh man, all the money I could have had. Shut up. If you think like that, you're losing. Okay, straight up. That's the most destructive thing. If you're making money, you're out trading 95% of traders that are around us in crypto Twitter and all that stuff. You're actually making money. You're actually a trader. Cool. If you trim 100% of your position right here and it still goes and pumps to take profit 1, whatever. There's always another trade. Emotions have no place. You made a decision. The decision didn't pan out perfectly. Maybe it does, and you pat yourself on the back, and then you're the best, smartest trader that whatever. But I would say I'm in this. I'm going to trim probably about 20% of my position at this right here. Trim, like sell some of my spot, and I'm not going to hedge it at $12. I'm just going to sell some straight up. And then I'm going to basically rebuy back down into the same one-day entry if we get back down into it. So that's the one day. That's my big macro target already. And I just made that on 2 signals. One long, one short. Doesn't have to be confusing. I took the long. Now I want the short. Give me bullish. Cool. Now let's see what's on the table for, oh, fuck. I should probably curse less if this is actually trying to go on YouTube. So 4-hour signals. We zoomed in. We got 2 things right here. The top range, this signal, for those of you in Discord, it's 10.93 and 10.93 basically. There's 2 short signals straight up in the same range. Those are at the top of the entry zone on the one-day signal at $10.93. So the one-day signal is now slightly serving as resistance. And then on the short side, you also have $12 on the 4-hour as well. I've added to my thesis. I now know that the 1-day signal, having been dipped below, now has some resistance on the 4-hour, where the top of that entry range is serving as resistance on the 4-hour. That's not uncommon. I'm not going to trim personally any of my position right there because that's what I started entering. Why would I just take a BEP trade? That doesn't make any sense. But once again, cool 4-hour, that $12 signal, that big macro move is now probable for me to happen, in a shorter time frame. Sorry. So, and then the inverse is unfortunately true too. First things first, I'm going to start by looking at the invalidation level on the injective signals. We have a long entry at 4 different ranges. Let's talk about them real quick. We got 8.6, 8.5 to 8.2, 8, and then 6.8. So we have 4 signals pretty stacked on top of each other. 8.6 to $8 range is just one big old pretty fat territory on the 4-hour. And then one signal I'd say sizably below, which is 6.8. So I'm going to, in my mind, have noticed the ranges stacking on top of each other, both on the short side. Those are now one range in my mind. And that these ranges I can just broaden out from 8.6 to 8, basically. Now, what do you do when this happens? It once again depends on where you're at. And let's just look at taptrade.io/Thor.
Oh, hold on. I don't think the switched over.
Yep. Sorry, Boyd. I got to mute you, boy. Okay, cool. I think I got it. And I will do questions at the end. So on injective, 4-hour, cumulative total, 60%, 0% on the 30-day. All right. So 8 down to 8.6 down to 8. I will add to my position if we fall into these ranges. I will add additional capital if we start going below and into these entry zones. This 6.7 signal right here on the 4-hour is something I'm going to put in my mind, and I'm going to go into that overall stop loss I put for my 1-day and see if that invalidates anything. Am I going to hit my stop loss? Well, if I took a 1 to 2, you're going to be right there. If I took a 1 to 1.5, I still have a pretty sizable drawdown that I can weather. So does that invalidate my thesis? No. Have I lost money up until that point? Yes. Do I add more? Yes. That's what makes the trader. It's hard to see a negative P&L, but if you have this injective trade on your radar and you know that there are 2 chances, again, 50-50, unfortunately, it's not just very clear cut and dry signal stacked on one side. But if you have capital left over, which you should never throw your whole bag at one trade. You should DCA in at that $8.66 down to $8 range, which we hit once, I believe. Yep. You can see we tailwinded it right here. And then, such as the narrative over the last couple of months, I would save some capital for the $6.80 injective. Let me see if I can zoom out well enough to see. Let me move over to Coinbase or CoinMarketCap. We'll look at injective right there, and then we're going to wind this down. All right. So $6.40 falls below what injective had been trading at pretty much the majority of 2023. That would be max pain for a lot of people, right here, $3. The first original pump was like $3.23, trading at $4, which is where my stop loss is for this entry, right, that I'm taking right now. My stop loss is all the way down there. I will weather the storm. That's what I'm saying. And I will also buy what looks like Thor is saying, one is key points of support, which makes sense with the 2023 trading range, and also coincides with what I trade off of, the Thor signals. So, that's my own personal take on Solana. Y'all know I'm not really actively trading it for injective. I am buying in these ranges. Now, what do you do if you have these three ranges pretty much stacked on top of each other, and then you have one below? Like I said, I viewed this as one entry zone, and what I always do is break my orders up anyways. I will break my order or my entries up into like 3 to 5 entry ranges, and that's all I'll do. I'll set aside the amount of capital that I want to make for each one of these trades. Let's just look at the take profits real quick. So the take profits on the first and second signal are pretty much the same, close enough. And then the third one, you get into, lower territory. But take profit 1, even on this third lower range, is still above where my first entry was. So I'm going to take whatever amount of capital that I'm putting towards this trade. I haven't decided yet. And I'm going to go probably 30% in this first range, 40% in the second range. And then I will set one on the lower end of this third range right here. That's for me basically breaking up, one signal, how I would have into 5 entry points, but just doing that in this range right here so that I'm ready for it either way. It doesn't matter to me. I'm fine. I'm just adding to my big macro position anyways. It doesn't invalidate my stop loss or my thesis on the 1-day call. And then I have, an equal amount of capital, if not more, set aside for the $6.80 signal if we get there. And if that happens, your first take profit on that, while it's a great 20% range, it is below your entry point on these signals up here. You can do a couple of things in that situation. If you're a spot buyer, you simply wait. You can buy this, additionally down here and still take your first take profit and make 20% on that. Does that mitigate the loss on the other entry that you got? Not at this time. But if you get up into the higher take profits at 8.9, it sure does. And that's how you can and should be approaching trades. If and when you get to where you join our community, if you're in there right now, y'all know that the easiest thing is to go in and want to take a bunch of trades. The best advice I have for you is to just trade 1 or 2 assets and to really isolate what it is that you're trading so that you just trade it more effectively. And that's pretty much it. So let me see what I got here. All right, cool. That's it for me today. I appreciate y'all if y'all are listening in live. If you want to listen in live, you can join our Discord. Go to taptrade.io. That'll route you to our Discord, where we have our trading community, where we have classes on Tuesdays and Thursdays also with our trading instructor mode. If you want to learn more about Thor, about Tap, about our automated trading services, taptrade.io is where you can find all of that. That's it for me. I'll see y'all tomorrow. Peace out.